Welcome back to the deep dive. Um, we asked you for some interesting stories, and you certainly delivered. You sent us a ton of reports about the global stock market crash on April 7th,
Yep.
2025. And, well, we're going to dive into it today. We want to kind of cut through all the noise and
You're
try to
right.
figure out, like, what was the main thing that really triggered this huge worldwide downturn?
Yeah, absolutely. It's not every day that you see this kind of like synchronized reaction across all the global markets. And the data you all sent in really paints a pretty clear picture. Big, like substantial drops in major indices everywhere. It's kind of wild.
Yeah, yeah. When you look at just, like, the scale of it, it's pretty remarkable. And, like, from everything you've looked at, like, what stands out?
So it seems like the main culprit, the one thing that everyone's pointing to is President Trump's tariffs that he just announced. That seems to be the main thing that everyone is attributing to this crash.
Okay. So this crash, this happened on April 7th, and that was right after the tariff announcement, which I think was on April 2nd, right, Dale?
Yeah, April 2nd, and they went into effect on the 5th.
Okay, so just a couple of days later, bam, the markets react.
Hmm.
And we're talking about what, like a minimum 10% tariff on like almost everything coming into the US? That's pretty sweeping.
Yeah, pretty much. It was a really like wide-ranging tariff, and I think that's what really spooked people.
So, okay, so let's get into like the specifics of what happened. Like, what did your research show in terms of how different markets reacted?
Well, starting here at home, North America, the impact was pretty significant. So the S&P 500, that had its worst day since 2020, I think, down almost 5%. And the Dow Jones, that plummeted by 4%, which is like 1,679 points. And at some points during the day, it was even more than that.
Wow.
And the NASDAQ, well, that was down 6%. And actually, the S&P, it actually came close to like bear market territory, which is a 20% drop from its high.
Yeah.
And the Dow, that had its worst week in 5 years.
And I remember there was like a lot of back and forth during the day, right?
There was, yeah. So there were these rumors about a possible tariff pause, so the markets went up a little bit, but then those were quickly dismissed, and yeah, the market just continued to go down. So it really shows just how like sensitive everyone was to any news about tariffs.
Yeah, absolutely. So, okay, North America, bad. What about Europe?
Similar story in Europe. The FTSE 100 in the UK, that fell over 4%, and that was its largest single-day drop since March 2020, beginning of the pandemic. And France, CAC 40, down more than 3%. Germany's DAX, also down 3%. The Stock 600, that's pan-European, that was down 6%. So really, across the board.
Yeah, everybody kind of freaking out together. That's scary.
Yeah, it shows you how interconnected everything is, right?
Right. And what about Asia? Because your research was showing that there was a lot of really sharp movement in Asian markets.
Yeah, definitely. Asia was actually hit the hardest. Japan's Nikkei 225, that tanked almost 8%. Biggest single day drop since March of 2020. And initially it was like almost down 9%, and that actually triggered a circuit breaker. So they had to like temporarily halt trading because it was just so volatile. Hong Kong's Hang Seng, that was down over 13%. And that's actually the worst single day performance since 1997. So pretty significant. And South Korea, Australia, India, all of those also saw significant drops. So yeah, a lot of people were saying this was the worst day for Asian markets since the 2008 financial crisis.
It's like a domino effect, right?
Yeah.
Like one market drops and then they all follow.
Yeah, it's hard to say where it starts and where it ends sometimes.
Okay, so these Liberation Day tariffs, that's what President Trump called them.
Yeah.
So can you break it down for us? Like, what were the key things that he actually announced?
Okay, so like at the core of it was this 10% tariff, at least 10%, on almost all goods that are coming into the U.S. And that was effective April 5th. But there was also like higher reciprocal tariffs, as he called them, on specific countries that have what he sees as a large trade deficit with the U.S. And those were set to start a little later on April 9th. And those ranged from 11% all the way up to 50% on 57 different countries.
Wow, 57.
Yeah, 57. So it was a pretty big deal.
And some of those higher tariffs, those targeted some really big, like our major trading partners, right?
Yeah, absolutely. China, they got hit with an additional 34% tariff, which brought the total to 54%. That's huge. And then the EU was hit with a 20% tariff, Vietnam 46%, and Japan 24%.
Wow, yeah, those are really big numbers.
And it's also important to remember that there was already a 25% tariff on imported cars that had just gone into effect beginning of April. So that was already in place. And then on top of everything else, there was the end of the de minimis exemption for goods coming from China and Hong Kong. And that was supposed to come into effect in May.
So basically, it was just like a whole bunch of tariffs all at once.
Yeah, pretty much. It was a pretty big shakeup.
So what was President Trump's reasoning behind all of this? Like, what did he say about why he was doing this?
So officially, he said that the goal was to reduce trade deficits, to protect American industries from what he called unfair competition, and to push for more reciprocal trade. He argued that other countries had like much higher tariffs on U.S. goods and that it wasn't fair.
Okay, I see.
But the markets clearly weren't buying it. I mean, the reaction was overwhelmingly negative.
Yeah, that's clear.
Yeah.
So if we're looking at that negative reaction, it seems like there's some pretty big economic anxieties that are driving it.
hmm
What are some of the main fears that you saw coming out?
Well, first and foremost, you had a lot of just panic, investor panic, and the uncertainty just exploded. The volatility, it just went through the roof. Like Australia's VIX, that jumped to 27, and the US VIX hit an 8-month high, and that reminded a lot of people of the early days of the pandemic. And a lot of wealth managers were saying that they were having a really hard time valuing assets. Like what's anything worth anymore, you know?
Right, yeah.
So beyond that immediate reaction, there were also fears of a full-blown trade war, especially after China announced their retaliatory tariffs. 34%, just like that. And they were, very vocal about it, condemning the U.S., calling it bullying and things like that. So that really added fuel to the fire.
And then there were concerns about how the EU and Canada would respond.
Exactly, because those were, big targets of these tariffs as well.
Okay. And so what about the bigger economic picture? Like what about recession fears, inflation?
Yeah, so those fears definitely intensified. We had people like Larry Fink at BlackRock
Hmm.
and Jamie Dimon at JP Morgan Chase. Those are some pretty big names in finance. And they were both saying that they were concerned about a potential recession. And then Goldman Sachs, they actually increased their estimate of a U.S. recession happening. They said it was up to 45%.
Oh.
Yeah, so those are some pretty serious numbers. And then at the same time, you had all this concern about inflation. Because these tariffs, the idea is that they're going to increase the cost of goods coming into the U.S., which means prices are going to go up. And UBS, they predicted that growth would slow down and inflation would go way up, like almost 5%. So that raised the possibility of stagflation, which is slow growth combined with high inflation. That's a really bad combination.
Yeah, definitely. So what was the overall takeaway from the economic experts that you looked at? What were they saying?
Well, I would say pretty much across the board, the economists were sounding the alarm. A lot of them were making comparisons to the Smoot-Hawley Tariff Act back in the 1930s, which a lot of people think made the Great Depression even worse. They were using terms like self-inflicted economic catastrophe. So, yeah, not a lot of optimism.
And I imagine they weren't too thrilled about the potential impact on corporate earnings either.
Right. Yeah, everybody was concerned about that. And you saw it immediately, right? Like Best Buy, their stock dropped almost 18%, United Airlines down 15%, Target down 11%. The tech sector, manufacturing, the auto industry, retail, everyone was hit hard. And even energy and commodity prices, those fell because everyone was assuming demand was going to go way down.
So basically, this was a global event, right? Like it wasn't just one country reacting in isolation.
Definitely not. And that really highlights how interconnected the global economy is. Like when one part of the system sneezes, the whole thing catches a cold, right?
Oh, for sure.
And then you had all this like international criticism. China, obviously, they were really upset talking about bullying, unfair practices. And then the EU, they called it a major blow to the global trading system, said it was nonsense. And then, everyone's talking about retaliatory measures. So it just felt like this huge trade war was about to break out.
So it's pretty safe to say, based on everything you've looked at, that President Trump's tariffs were the main thing that kicked off this global stock market crash, right?
I would say the evidence is pretty overwhelming at this point. Like the timing, the scale of the reaction across global markets, and all of the concerns that were being voiced, it all points back to the tariffs. People were worried about trade wars, recession, inflation, you name it.
It's pretty amazing, right? Like one policy announcement, and just like that, the entire global market is in free fall.
It's a real reminder of how much power a single decision can have in this, increasingly globalized world.
Yeah, definitely. So as we wrap up this deep dive, here's something I want you all to think about. Given how interconnected the global economy is, what other unexpected consequences beside this, big market crash might these tariffs lead to in the long run? That's something I think is worth keeping in mind as we, see how this whole thing unfolds. Thanks for exploring this with us.